Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, and share buttons. Well, no doubt we're heading into a global depression. Now, we've looked at a lot of data points over the last few weeks and months that indicate that. But today we're going to talk about what may very well be the catalyst, the event that tips us over into that depression to the point where everyone recognizes that it's a reality, meaning you won't just hear me talking about this, but you'll hear the mainstream corporate media talking about, well, they'll call it a recession at that point, but it's really a depression. And so we've talked about this in the past, specifically what this is and that it's coming, and it's coming soon. But there's an article that really delves into the details and helps illustrate this a little bit better. So I want to take a look at it. And it's this article that I'm talking about right here. This is from realinvestmentadvice.com. It's written by Lance Roberts. Lance is a financial advisor. He's a weekly guest on Wealthion with Adam Taggart, if you ever watched that program. So I've seen a lot of Lance Roberts over the last, year and a half that they've been doing that. And I can tell you that he is not one to always say the sky is falling or that we're heading into this market collapse or anything like that. Far from it. Usually has a very muted response, very even-keeled in regard to what's happening in the markets, what's happening in the economy. But he's written this article here that says, student loan repayments, will it start the recession? And I want to stop right there and say that should be amended to, will it start the depression? Because guys, we are already in a recession. They may not acknowledge that right now, but they will at some point later. That's typically how this happens in the past. If you were around in 2008 for the great financial crisis, you'll know that right up until the point Lehman Brothers collapsed in September 2008, they were saying, "Oh, we're not in a recession. I know it's been bad. There have been some subprime losses on these homes." And then a few months later, as millions and millions of people are losing their jobs, they go, "Oh yeah, the recession began back in December 2007, right?" So that's how this stuff works. Every time it comes, they don't recognize it until usually a year and a half after it's already occurred. So guys, I don't need government data to tell me we're in a recession right now. All I need to do is look around at what's happening. I look at these interest rates that have skyrocketed from where they were, housing prices that were already at bubble levels, now being sent these mortgage rates that are the highest in years since before the great financial crisis. We have people who are skipping meals because they can't afford their groceries anymore. People who used to shop at high-end grocery stores are now shopping for their food at Dollar General and the Dollar Tree. And people are making videos saying this is how you can feed yourself for as little as possible. When you have that type of thing going on, when you see auto loan defaults and auto loan late payments, the highest they've been since at the peak of the great financial crisis, we're already in a recession. We've been over the data many times. It's pointing us toward a depression. So keep that in mind. They're telling us now, so we're not even in a recession. But when they finally acknowledge we're in a recession, that's when we're in a depression. So that's how it works, guys. But anyway, let's get back to this article where he talks about how important this is. It says, millions of young Americans will face the end of the student loan payment moratorium this summer. Why is this happening now after a 3-year break from payments? It's the result of the recent passage of the Fiscal Responsibility Act, which you gotta love Washington. They always name things the exact opposite of what it is, to raise the debt ceiling. Under that act, the Biden administration has prohibited from extending the pause on student loan repayments, which have remained in place since March 2020. These were originally supposed to be, this moratorium was supposed to last, I think, until September of 2020, and it just keeps getting renewed and extended to this point that it's been almost 3.5 years since anybody had to make a payment. It says student loan payments are set to resume in the coming months for more than 40 million Americans carrying student loan debt. The timeline to resume making payments is now on the horizon. The debt ceiling deal passed earlier this month paves the way for student loan payments to resume as early as August 29th, 2023, per the latest update from the Department of Education. For most, this will be the first time making payments since the early days of the pandemic in March 2020. So keep in mind, even though people know they have to pay back these loans, or at least many were probably hoping they would be just magically forgiven, even though they know that they were making these payments in the past, at this point it's been well over 3 years. People have come to expect, well, this is my permanent state, is to not have to pay these back and to have this extra disposable income. And that's what it says here. It says, so what? Some students with tuition debt now have to pay their loans. While on the surface, the restarting of payments does not sound like a big deal, it is. As of the end of the first quarter, almost $1.8 trillion in student loan debt is outstanding. That debt carries a substantially higher interest rate than current bank loans. About 92% of student loan debt is federal, with interest rates ranging from 4.99% to 7.54%. Average private student loan interest rates, on the other hand, can range from just under 4% to almost 15%. When you account for the size of the debt outstanding, the impact on personal spending in the future is significant. The analysis is based on federal student loan data for the aggregate $1.4 trillion balance across 40.5 million borrowers by age cohort. Utilizing a 10-year payment period and a 5.8% interest rate, the bank calculates an approximate $390 per month payment across all of these cohorts. They call all of these different groups that owe different average balances, different average monthly payments. It says compared to a median pre-tax personal annual income of around $57,000, this payment represents approximately 8% headwind to monthly income. In aggregate, this amounts to additional, or rather, it says original, as the payments were there 3 years ago and they just stopped, $15.8 billion in monthly payments for federal student loans, affecting approximately 15.5% of the U.S. adult population. That's according to Barclays. That's a significant amount of money consumers have retained to spend on other things, such as likely why retail spending has remained surprisingly buoyant in the face of higher interest rates and slowing economic growth. However, the question is whether the return of tuition payments will weaken that economic support. And guys, let's face it, the answer to that question is obvious. If the average person has $300 a month that they haven't been having to spend, so they've had this, and all of a sudden you add on a $300 a month payment, well, that's $300 a month they're not spending on whatever they're buying out there, whether it's an iPhone or eating out. So, you're going to see restaurants and retail really hit hard as a result of this, because this disposable income is going to go away. People are going to realize, I have to start making these payments again. And then when they realize that, they're going to cut back on a whole host of things. Netflix subscriptions, all these streaming subscriptions, all this stuff will go away. They'll cut back on vacations, any number of things. And that's going to have a huge impact on the economy. He goes on, it says, retail sales and economic growth. In the first quarter, the U.S. economy totaled $26.5 trillion. Of that, as shown, personal consumption expenditures, meaning what we spend in the economy, total $18 trillion. In other words, nearly 70% of the economy is a function of consumer spending. Logically, the concern is that when student loan payments restart, that will divert spending from the economy into debt service. In the U.S., retail sales comprise about 40% of personal consumption expenditures. When student loan payments restart, the most immediate impact will be felt in retail sales as consumers have less money to spend on discretionary items and services. Since 1992, retail sales on a seasonally adjusted basis have grown an average rate of $1.4 billion monthly. The chart below shows the annual rate of change in seasonally adjusted retail sales versus the 12-month moving average, the average rate of change. And so we can see how this is going and where we're headed. And we'll see more in just a moment. If Barclays Bank is correct in its assumptions, removing the student loan moratorium on payments will significantly impact retail sales. The chart below projects the average retail sales growth less student loan payments. If Barclays is correct in its assumptions, the impact on retail sales could be significant. And let's look at this, guys, because here's what they're projecting. And these payments start next month. The end of next month, these loans will start having to be paid back. The payments will come back in, and the impact on retail sales, this is bigger. They're projecting bigger than the depths of the Great Recession. Not quite as bad as the pandemic shutdowns, but that was very brief in nature. This is going to be an ongoing month after month occurrence. It's not just going to be a brief shutdown for a week or two and then things spring back. So we're looking at a potential, this could be what tips us over into that depression. And here he says, again, a recession risk. Again, a depression risk is what it should be. Given the importance of retail sales on overall economic growth, it's difficult to avoid a recession. We're already in one, guys. Difficult to avoid a depression. According to a New York Fed study, the average student loan payment is $393 monthly. So we're hearing, $309 to $393, somewhere in that 300 range. For consumers taking advantage of the program, they had deferred 39 months worth of payments, resulting in more than $15,327 in additional discretionary income during the period, much larger than the amount most consumers received from other COVID stimulus programs. So of all the COVID stimulus programs, all the checks they sent out, all that, this was one of the biggest of all. That sudden increase of $393 per month in loan repayments will force prime age consumers, those 18 to 44, to cut back on discretionary spending. Since portions of that particular demographic tend to prioritize experiences over goods consumption, we will likely see a more significant impact on services, which, as discussed previously, has been the one support keeping the economy out of depression. Right? The one support. It says this isn't the first time we've seen the manufacturing side of the economy contract, but services remained robust enough to keep the overall economy out of recession. The economy similarly avoided a recession in 1998, 2011, and 2015. But once this goes away, they can't count on that anymore. And so it's inevitable. If the data is correct, the economic and earnings risk is significant. Here he writes an overlooked risk. Since January, investors have been piling into cyclical stocks, assuming inflation would ease and the economy would avoid a recession. As noted, Wall Street analysts have become optimistic about accelerating earnings growth into next year. Analysts expect the first quarter of 2023 will mark the bottom for the earnings decline. It will not. That's my commentary thrown in. And growth will accelerate into year end. It will not. That's my commentary. Again, this is despite the Fed rate hikes and tighter bank lending standards that will act to slow economic growth. The problem with these expectations is the detachment of earnings estimates above the long-term growth trend. The only two previous periods with similar deviations are the financial crisis and the dot-com bubble. So here we see this deviation from long-term earnings trends, the tech bubble that led to the dot-com bust, and the big buildup, the real estate credit bubble, leading to the Great Recession. And so now here we are again with this detachment from reality in an overvalued market. It says, however, the restarting of the student loan repayments may be the one thing Wall Street overlooked in its rush to trumpet the return of the bull market. The problem is that cyclical stocks heavily depend on consumer spending, particularly in technology, where companies like Apple, Microsoft, and Amazon are direct-to-consumer companies. As those funds are redirected to student loan payments, a contraction in consumer spending will directly impact those companies' sales and reduce their bottom line earnings. Given that markets and many of the high-flying names in 2023 are grossly overvalued, any negative impact on forward earnings estimates could lead to a significant price correction. In other words, the market is going to crash, guys. That's a nice way of saying that's what's going to happen, because it's only the companies they just mentioned, Apple, Microsoft, Amazon. It's only a handful of those stocks that are propping up the entire market as is. So once they start to go down, they'll take the entire S&P 500 and the Dow with them, and then you get the panic selling. So most certainly such a price reversion would accompany a recession, we're going to call it a depression, in the economy caused by a contraction in spending. While it is always unwise to bet against the U.S. consumer, the restarting of student loan payments is likely a hurdle the economy will struggle with. Furthermore, it's likely this is an impact the market has yet to factor into its assumptions for future economic and earnings growth rates. We will find out later this year. Yes, we will. We're not going to have to wait a long time on this to find out if this is true or not. My guess is sometime before Thanksgiving rolls around in the United States, so before the end of this calendar year, you're going to be seeing the mainstream corporate media discussing what we just talked about here today. And they'll be calling for more moratoriums, more stimulus checks. Oh, it's so terrible. Look at what's happening. But this is going to be what tips us over, I believe, into that point where the general public starts to recognize the problem, because as these payments start to kick back in, people are going to be pulling back on their spending. And that's when companies that rely on that spending are going to start laying off workers when those sales don't come in. And it's going to create this vicious cycle. There's no strong point in the economy to lean on to help offset this. And we're just going to tip into a depression. And again, we've talked about many of the data points, the reasons why this is coming. It's not just this. This is just the latest example. We've talked about the percentage change year over year in the Fed funds rate, the effective Fed funds rate. That's the interest rates that are circulating throughout the economy. That effective Fed funds rate rose at an all-time high over the past year and a half, from near zero to over 5%, something like a 5,800% increase at its peak, when the previous high, going all the way back to the 1950s, was 400%. So we've seen this spike. The interest rates aren't as high as they were in the late 70s, early 1980s. But it's not about how high they are. It's about how quickly they got to where they are from where they were. And the jolt, the shock that gives to people who are relying on that financing, the businesses that were relying on that financing. And it's going to lead to defaults and bankruptcies. We've seen M2, a measure, the Federal Reserve's measure of money supply, contract at the greatest rate since the Great Depression, the depths of the Great Depression. We've seen Europe actively engaged in deindustrialization because they're falling apart. And then we see headlines like this one from the Telegraph. Half of America's banks are potentially insolvent. This is how a credit crunch begins. That's from May. Look for more banking failures. We've talked about a bank holiday. I believe it's coming, probably before the end of the year. We're going to wake up one Monday morning and find out that our banks are closed. That's my guess. And they'll remain so for several days, maybe several weeks, while they sort out the mess and try to figure out how to bail out this bankrupt system. And guys, think about the implications of that. If people can't get access to their funds, if you see, all that's associated with that, the social unrest that will come from that, the demagogues that will rise in the political ranks all over the world. And I believe this will be going into the worst crisis we've faced economically since the Great Depression. And have no doubt they're going to use this to try to roll out their central bank digital currencies. That's what they're going to try to do. That's what all this leads to. And all that does is set the stage for the mark of the beast system. It puts it in place. And then, of course, we had the conditions, the social conditions in place to give rise to someone just like the Antichrist to take advantage of that, seize control of that system, and rule over the world and control who can buy or sell, just as we read in Revelation 13. So guys, I believe the stage is being set for all of that to take place sometime in the near future. Does that mean all of that's going to happen tomorrow or the tribulation starts tomorrow? No, it does not mean that, but it means we're seeing all of the stage pieces being put in place. They're being arranged and put in the proper place so that will happen sometime in the near future. So what should you be doing? You should be reading your Bible. You should be focused on your relationship with God. You need to make sure that you know Jesus Christ as your Lord and Savior, and you know that He is the way, the truth, and the life. No one gets to the Father except through Him. You need to understand that, know that. That's the most important thing that anyone can do. And I don't know how much time we have left here, so we need to be spreading the gospel to as many people as possible. So what do you think? Are we in a recession already? Are we heading into a depression? Is all of this just nothing, doom and gloom, and everything's fine? If you think that, leave your comments below. All comments are welcome, except the spammy comments. But I don't think that everything is fine right now in the economy. I think we've been in a recession. I just look around me and I see all of the struggling going on. I look at the prices in the grocery store. That's all I need to look at and go, okay, pretty much everything in the grocery store is double what it was 3 years ago. I don't know about you, but my income hasn't doubled from 3 years ago. So that makes it more of a struggle to buy the groceries. And I'm sure everybody is dealing with the same problems. So how is that not a recessionary condition when you see so many people relying on food banks and the dollar store in order to eat? If that's not a definition of a recession, I'm not really sure what one is and what good those definitions of a recession are. So leave your comments below. Let me know what you think. Make sure to hit the like, share, and subscribe buttons. When you do that, more and more people see these videos and they hear about the love and hope of Jesus Christ. So do those things, and God willing, I will see you on Wednesday. Bye. If you want to learn more about the end times and Bible prophecy, make sure to sign up for my free monthly newsletter and get your copy of my free ebook, 7 Signs of the End Times. Just follow the link in the description to get your free book. Also, make sure to check out all of my books. Just look up Britt on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.